In this video, we're going to talk about the 10 most common tax mistakes that people will make in 2022. But first, if you're interested in learning how to file your taxes for free, go ahead and hit this link right up here in the top corner where it's going to talk about your way to file your taxes for free online. All right, so let's jump right into the video. So if we're going to talk about the first one, it's going to be the best thing that you can do is going to be to file online. People make mistakes of filing through snail mail, and it can take forever for them to get their payments back. And so this not only saves trees, times, and money, but it just makes it a lot easier for you to get your taxes done. And so I would definitely recommend moving forward with filing online because it has the forms built right in for you, and you can also get your refund a lot faster and easier straight into your bank account than it would be going through mailing it in. Also of note, for this year, tax refunds will take a little bit longer. They'll be delayed about an extra week to 2 weeks, so prepare yourself for that just because of all the delays that are occurring with COVID. All right, number 2 is going to be if you get one thing right, make it your filing status. And so there's a lot of things that go into your filing status. This is the single, you can be married and filing jointly. You can be married and filing single. And so there's different ways, and there's going to be different deductions that go along with it. And so knowing exactly where you fit in this and filing in the correct way can end up saving you a lot of money down the road. You need to determine which one you're going to be because it's going to determine which deductions and which credits you will be eligible for, and that will actually end up making or losing you money down the road with your taxes. So number 2 was getting the right filing status. Number 3 is going to be making the magic number associated with the adjusted gross income. So what is the adjusted gross income? So the adjusted gross income is going to be what your total income is minus whatever the government is going to subtract for certain expenses such as education, tuition, and IRA contributions. Some other things that they're going to count on this is going to be a child tax credit, child dependent care tax credit. There's going to be the American Opportunity Tax, lifetime learning, basically things that are going to offset your income. Gambling losses are on there, IRA contributions, like we just said. There is also some residential energy credits if you have solar panels or things like that. And so this is the type of stuff that you need to keep in mind. If you meet any of these criteria, you should definitely take advantage of these deductions. Now, one thing that we're going to talk about is going to be the difference between deductions, exemptions, and credits. And so that's going to move down to the fourth thing that I want to talk about, and that's going to be exemptions are a quick way to lower your tax bill. So exemptions and deductions are similar things that we're going to talk about. And so basically it's if you have been contributing member of the society, or if you're married, or if that you have children, then these are reasons why the government is going to give you a discount for doing these things. And so it's going to depend. This article says $3,700 pending on what you have actually done up to that point. But in 2022, 2021, taxes are going to be dependent on what criteria you meet. So just keep in mind that if you are married, you can get a good tax exemption for that. All right, number 5 is going to be a $1,000 credit equals a $1,000 in savings. So the difference between a deduction and a credit is going to be that deduction will adjust your adjusted gross income, whereas a credit at the end, when you get your final number, you can actually deduct $1,000 in this case off of what your total taxes were going to be. So if you're going to end up having to pay $3,000 in taxes, then a $1,000 credit will make that $100. Will make that a $2,000 tax payment. It'll deduct $1,000 from $3,000, which is pretty great. And so, in the grand scheme of things, you want to have the credits are way better than a deduction because a deduction might not actually adjust how much you're actually having to pay. All right, number 6. Number 6 is going to be itemizing your deductions could save you thousands. So the difference between itemizing versus just taking the standard deduction can be huge depending on what type of income you have and how much and what you're spending your money on. And so if you should take the standard deduction if your itemized amount is going to be less than what the standard deduction is going to be. It's very simple and it changes depending on what year it is and whatnot, but it can be anywhere between $5,800 to $11,600. And so definitely take the time if you have multiple different things that meet into the deduction criteria, like we talked about earlier, right here. If these fit into there, or if you have a lot of interest from mortgage payments, then that will definitely be something that can offset and be more than the standard deduction. So they explicitly say medical expenses, large charitable donations, and mortgage interest payments are things that you should consider when determining if you're going to do the itemized versus the standard deduction. All right, number 7 is going to be audits aren't the end of the world. And so it's going to happen, right? So it's a very common thing for people to get audits. And so it doesn't mean that you did something wrong necessarily. It means that the IRS just flagged you because they see so many different things going on, so many different tax reports, and they just have an automatic system that will trigger it and put an audit on your particular tax refund. And so what we recommend doing is, that doesn't mean you did something wrong. Go back through, look at your taxes. If you did everything right, then all you have to do is let them know that I did everything right, and then they'll review it one more time, and they will move forward with their process, and they won't have to do anything with it. Sometimes it was just a small math mistake, and yes, they can catch that, and yes, they do they will actually fix those for you sometimes. And that's all it really is. And what will happen is if there is a point where you have to pay a little bit more or you owe more taxes, all you will do is you'll pay the tax. There might be a small interest fee because it now is considered a little bit late, and then you move on, and that's it. And so nothing really to worry about. An audit is not a life or death thing. It can be frustrating, but I would not worry about it. All right, number 8 is you can file an extension for paperwork, but not for your actual payment. And so if you are needing to actually extend the time that you need to submit your paperwork, then that is pretty easy. All you have to do is place an extension. And we're actually going to talk about that in a video later on how to file an extension. If you go ahead and hit that like and subscribe button right now, then you'll be notified of when the next one comes out, and then you can see when that happens. But yeah, you can only do an extension on the paperwork. If for the actual payment, you will have to pay that. So keep that in mind. There are other ways that you can pay for it. We won't cover those in this video, but it's something that we do recommend if you do need that extension to definitely file for that. And then number 9 is sometimes you just need an accountant, right? And so some people make the mistake of not getting an accountant when they really need one. If they have a very complex tax history, if they're having their own business, if they're self-employed, they're making big life changes, then that might require an accountant that just TurboTax might not handle. Now TurboTax does have these like online tax accountants that can help you out now, and so that might be a good option for you. But just taking a step back and realize that you might need help on this is the first step to making sure that you don't make a mistake on your taxes and require you to pay fees down the road. All right, and then the last one is going to be number 10, and please do not get a rapid refund. It is not worth that getting that extra money, getting your money early, a couple weeks early, just because you can, right? You're going to end up paying $50 or more for that rapid refund. It's not worth it. It's not worth it. And so do not do that because you can wait. You are a good penny pitcher. You have thought about it, and you have really delved into, I have a budget and I know that I'm not going to need to spend this money. I'm not going to need this money. And so then you don't need to actually pay them money to get your money even faster. So do not do that. Do not do the rapid refund. If you got some good information from this video, then hit that like and subscribe button. Go ahead and look at this video up above me right now. It's going to tell you how to file your taxes for free. And that's from my buddy Bradford. And then if you hit that subscribe button right here, that'd be great. And as always, I want to remind you to pinch a little bit.